The American dream has a specific shape. You know the shape. You've known it your whole life. College degree, good job, house with a yard, 2 cars, family, retirement at 65. This is not just an aspiration. It's a script, a sequence of financial decisions that society treats as the default path, the responsible path, the path that serious adults follow. And in 2026, following that script precisely is one of the most reliable ways to arrive at 65 financially fragile. Not because the values behind the dream are wrong. Stability, family, security, these are legitimate things to want. Because the financial vehicles the dream prescribes, college debt, mortgage maximization, 2-car households, delayed investing, were designed for an economic environment that no longer exists. And following them faithfully, without questioning whether they still work, is costing an entire generation the financial security the dream was supposed to provide. When the investment stops returning, the dream says, get a college degree. It's an investment in your future. It pays for itself. In 1980, this was largely true. Average annual tuition at a public university was approximately $3,000 in today's money. A college graduate earned meaningfully more than a non-graduate. The debt required to finance the degree was manageable relative to the income premium it produced. In 2026, average annual in-state tuition, plus room and board at a public university, is approximately $28,000. Private universities average $58,000 annually. 4 years of education, $112,000 to $232,000. The income premium a college degree produces has not grown proportionally. In many fields, it hasn't grown at all. In some fields, alternative credentialing through trade programs, boot camps, and certifications produces equivalent or higher income at a fraction of the cost and time. Meanwhile, the average student loan debt at graduation is approximately $37,000. Many graduates carry significantly more. That debt delays every other financial milestone. It delays emergency fund building. It delays home buying. It delays retirement investing. It delays wealth building by years. That cost compounding decades cannot recover. The dream says college is always worth it. The math in 2026 says it depends entirely on what you study, where you study, and what it costs relative to the income it produces. Following the dream uncritically without running those numbers costs millions of Americans decades of financial progress. When ownership becomes a trap, the dream says, buy a house. Stop throwing money away on rent. Build equity. Real adults own homes. This advice was financially sound when price-to-rent ratios were in the range of 12 to 16, when houses cost 3 to 4 times annual income, when mortgage rates were at levels that made monthly ownership costs comparable to rental equivalents. In 2026, the median home price nationally is approximately $420,000. Median household income is approximately $78,000. That's a price-to-income ratio of roughly 5.5. In major coastal cities, where most economic opportunity concentrates, the ratio is 8, 10, 12 to 1. Mortgage rates have remained elevated. Monthly ownership costs, mortgage, property taxes, insurance, maintenance in most markets significantly exceed the cost of renting an equivalent property. The financial case for buying over renting has inverted in many markets. The math that made homeownership the foundation of middle-class wealth building no longer applies in large portions of the country. But the dream doesn't update for market conditions. The dream says buy anyway. So people stretch. They take on maximum mortgage debt. They drain savings for down payments. They commit 30 years of income to a purchase that the current math doesn't support. And they call it responsible, because the dream says it's responsible. The 2-car household, the silent wealth destroyer. The American dream assumes car ownership, multiple car ownership. It's baked into the suburban design that the dream produced. The average American household spends approximately $12,000 annually on vehicle ownership. 2-car households approach $20,000 to $24,000. Car payment, insurance, gas, maintenance, registration, depreciation. On a $78,000 household income, that's roughly 25 to 30% of gross income going to vehicles that sit parked approximately 95% of the time. That $12,000 to $24,000 annually, invested instead at 7% over 30 years, produces between $1.2 million and $2.4 million. Not the vehicles, not the depreciation, not the insurance premiums. The opportunity cost of normalized car spending in America is generational wealth for millions of households. But the dream says, of course, you have 2 cars. How else do you live? And because the suburban infrastructure the dream built makes the question feel rhetorical, the cost goes unquestioned. The retirement timeline, when 65 became a trap. The dream says retire at 65. Work your whole career, collect Social Security, live comfortably. Social Security was designed in 1935 when life expectancy was 61 years. The retirement age of 65 meant most people would never collect. It was insurance against outliving your savings for the few who did. Average life expectancy in 2026 is approximately 77 years nationally. For people who reach 65, expected additional lifespan is roughly 20 years. You're funding a 20-year retirement, with savings accumulated over 40 years of work, on a savings rate the dream never specified, but the culture normalized at somewhere between 0 and 10%. The math produces a crisis. The average American approaching retirement has approximately $87,000 in savings. At a 4% withdrawal rate, $3,480 annually, $290 monthly from savings, combined with Social Security averaging approximately $22,000 annually, total retirement income for the median American is approximately $25,000. The federal poverty line for an individual is approximately $15,000. The dream promised comfortable retirement. The math produces survival, not because the dream's values were wrong, because the dream never told you to save 25% of your income starting at 22. Because the dream told you to buy the house and the cars first. Because the dream's financial prescriptions have never matched what retirement security actually requires. Who benefits from the dream you're following? Here's the question the dream doesn't want you to ask. Who profits from you following this script? The college tuition ecosystem profits from the belief that a degree is always worth any price. Universities have raised tuition at rates far exceeding inflation for decades because the cultural mandate of college attendance makes demand inelastic. The housing industry profits from the belief that buying is always better than renting. Real estate agents, mortgage companies, banks, home improvement retailers. The entire ecosystem benefits from maximum home purchase at maximum financing. The automotive industry profits from 2-car household normalization, not just car sales. Insurance companies, finance companies collecting interest on auto loans, gas companies. The financial services industry profits from delayed investing. Every year you don't invest is a year your money isn't compounding in your favor. The American dream as a financial script is not neutral advice that happens to be suboptimal. It is a set of consumption behaviors that produce enormous profits for industries that have every incentive to maintain the cultural script. You're not following the dream because it's financially optimal. You're following it because every institution that benefits from your following it has spent decades ensuring it feels mandatory. What actually builds wealth in 2026? The alternative is not rejecting stability or family or security. Those values are worth pursuing. The alternative is decoupling the values from the prescribed financial vehicles. You want stability. Build it through savings and investment, not through a maximum mortgage that consumes your capacity to save. You want to provide for family. Invest aggressively in the years before having children so compound growth runs while you're building. Don't delay investing until after the house, after the cars, after the lifestyle is established. You want security. Build liquid assets that provide genuine optionality. An investment portfolio gives you options. A house gives you a place to live and limited liquidity. Specifically, in 2026, Question the college math before committing to the debt. Run the specific numbers for the specific field at the specific cost. Sometimes it works. Sometimes an alternative path produces better outcomes at a fraction of the cost. Evaluate the rent versus buy decision on current math, not on cultural assumption. In many markets, renting and investing the difference produces better long-term outcomes than buying at current prices. Challenge the two-car default. In many urban and suburban environments, one car or no car is viable. The savings are substantial. Invest before lifestyle expands. Every raise, every income increase should flow to investments before lifestyle claims it. Lifestyle inflation is the primary mechanism by which income growth fails to produce wealth growth. The American dream is not evil. The values it represents are legitimate. But the financial script it prescribes was written for an economic environment that existed decades ago and has changed dramatically. College costs have risen tenfold in real terms. Housing prices have outpaced income growth for a generation. Two-car households are normalized despite their enormous cost. Retirement savings expectations never matched what retirement security requires. Following the script faithfully in 2026 produces outcomes the script's authors never intended and its followers don't expect until it's too late to change them. The dream that was supposed to deliver financial security is delivering financial fragility for millions of Americans who did exactly what they were told. The first step out of that trap is questioning whether the advice you're following serves your financial interests or someone else's. Because the dream was sold to you by people who profit from your following it. And the wealth that the dream was supposed to produce will only come from making decisions based on what the current math actually supports, not what the script says you're supposed to do. What actually works in 2026 for you?